Monday, the 10th of November 2025. It's a beautiful, crispy morning here in rural Ireland. You can see the sun. That's the south over there. That's roughly Kerry down that way there. It's coming from there. Maybe Cork. Don't hold me to it. But it's a lovely morning anyway, and we're well into the winter now. So, folks, the first thing I want to tell you is I've made two videos on. I've made actually three, but I've made two that are important on financial accounting. And I emphasize, I'm not your financial advisor. You should go to a qualified financial advisor for that, or an accountant for that. You still have to do that perhaps. Now anyway, I do my own because I understand it a bit. But the point about it is these videos can be detrimental to my channel, because if I do a very long-winded video, people may get cheesed off, and then they want a quick buzz, and it could damage my channel a bit. But what I'm doing is, I used to upload them on Rumble, and I may still do so, but people will not go to Rumble. I don't know why that is. It's because YouTube is up on the television, and yet there's no easy contact to Rumble. Anyway, the first video is financial accounting 1, the profit and loss account, and in that I explain what the profit and loss account is. It's an account of how your business or whatever you're doing performed over a particular period. 12 months usually the 1st of January to the 31st of December. But if you're closing down in July, you'd have a shorter, more truncated one. Or if you opened up in July and you're using the end of the year as your accounting period, you'd have a shorter one for that. So you understand that. Now the thing is, I explained the profit and loss account and what it contains, sales and the cost of sales. And I explain how stock is handled. And that's, if you don't want to look at it all, go to 15 minutes in, for farmers in particular, how stock is dealt with. The closing stock is valued at the end of the year, and then at the end of the next year it's valued again. So you have sales less cost of sales, and cost of sales is the opening stock, and the next thing is purchases, what you bought to make those sales, less the closing stock, and the total of that then is taken away from your sales, and that gives you your gross profit or your operating profit, or whatever you like to call it. That's simple enough. And the point about it is, if you have 5 bullocks there and they're in good order and they're thriving well and you have plenty of feed, you can keep them, because you'll be valuing them, let's say, at 2,400 a piece at the end of the year. And if they come into the new year, that old valuation is taken into the new year, 2,400. And if you sell them, we say in March, and they make 1,000 in the meantime, well then that profit is earned in that particular year because they thrived and done well. So it's, you make your decision as a farmer on the other matters. You don't make it on tax or accounts or anything else, and that's well explained in that video. And if anyone wants me to explain it further, I'll do it if you really want. So that's the important thing. Then then I go on to video number 2, and I deal with the end of the profit and loss account, the expenses. What are expenses? Telephone, rates, rent, all of that. And I explain then how some expenses go into the cost of sales. So if you're mowing silage, I believe you'd be putting your diesel purchases into the cost of sales of your mowing your grass. You wouldn't put them into the general expense, whereas the insurance on the tractor would go into the expense account. Do you understand that? So I deal with that and I show you that. And then I move on to the balance sheet. The profit and loss account is the position over a year, what you made from the first to the end of the year. The balance sheet then has a number of items to it. The first thing is assets, fixed assets. That's assets that don't move around, like your tractor, like your shed, your slatted shed or whatever, and that is depreciated. And the depreciation of your fixed assets for the year go into your profit and loss account. They're charged to the expenses of your profit and loss account, but then you add them up each year. They're accumulated, and that reduces the value of your asset, called net book value. So you have your asset and you have your accumulated depreciation, and that gives you your net book value, what your assets are worth today. So the tractor costs 40,000. There's 10,000 depreciated over the last few years. You say you bought it a few years ago, and then so now it's worth 30,000. That's what depreciation is, and there's 2 ways of calculating that. I won't go into it. So then you have your assets, and that includes intangible fixed assets such as patents, that you own, or we'll say a goodwill. So a vet buying a practice is an example of an intangible fixed assets, and they are amortized. Now a good patent wouldn't be amortized much, but eventually it'll run out, so it dies. A goodwill with a vet will run out over a period, and that's called amortization, and it's treated the same as depreciation, and that's a charge to the profit and loss account under expense, and then it's taken out from your assets, and you have your net value of your assets at the end of the year, including all of your assets. Now, so the next thing comes under that is your current assets. They're the current assets, so that would be what people owe you, your creditors, what people owe you, money that was given to you for work to do in the future. So there's a few things like that. Current assets, they're your current assets, what you have some income coming in from them, or what they're worth, they're your current assets. They're movable. So I currently owe my local hardware shop a bill. I have to go in and pay that. Now, that's my liability. So you have current assets at the top. If people owe me money, that's an asset. But now we move down to the liability, current liabilities, that's what I owe them. And our liabilities are taken from the assets, and give you the overall value. What did you call that? Your working capital. That's your working capital. So then, when you have that done, you have a figure at the bottom here. I think I have 180 in the account, 1,000. When you have that figure, you have to show how it's financed. How did you finance this? And that's why they call it the balance sheet. And that could be shares. It could be your own money. Your Auntie Bridgie could have invested 50,000. So that's how you financed it, your shares, or whatever means you might have put your gratuity into the company, or whatever. That's your finance, how you financed it. Okay, and you can show any other accumulated profits from the profit and loss account are also financed. So if over the last 10 years you're taking in 19,000 a year, well, that'll build up. We'd say it's 10,000 a year over the last 9 years. 10 9's 90, so that'll be profit and loss account 90,000. So if you're making money, you'll be adding to the finance by. This will be financed by your profit and loss account. Okay, the accumulated profit or loss is removed from your balance sheet as financed by. Now we leave that like that. Most importantly, folks, is that I don't want you turning away from my channel because I have technical stuff. These two videos will be coming up soon. Financial 1, and I'll have a warning, specialist interest. Financial 2, and a warning. And I made 2 on the second, and one of them, I don't know which is the best, but I'll put up one of them anyway. And so the sign fell down at the end of it, so you know if it's it. Anyway, that's what you're going to get. You might never look at it. You might never want to read it. I don't know. But there could be people out there who don't understand it. And why can't I show it? Because education is part of my channel. Real, true education. And this comes under the education heading. I did a course in this. Now, in the Gardaí, we didn't do this. No, we did drugs law and firearms law and explosive law and road traffic, all that. But we didn't do this stuff. We didn't do this. When I did my course, I went up to people in my town wanted me to do it to bring up the numbers. It wasn't for love of me. You cannot lift as well. But I did this course. But when I came to this stuff, you can see it was grist in the middle. I'd say the lecturer could see my eyes lighting up. That's how it's done. I see now. I didn't know how it was done. And to get this shown to me in the proper way of doing it, there was a lady there, I'll mention her, she was Loretta. Oh, she was a great one. Oh, she was great. She was so precise. It was very enjoyable that way. I did it with the Institute of Public Administration in Lansdowne Road in Dublin, and I have good things to say. So there you are, folks. That's it. We'll see you back. I want to get back to the politics because there's so much happening now. Now remember, you're going to see this video, you look at it, it's only 9 minutes, and then the other ones are 20 and 22 minutes, and you'll look at them if it suits you. And if it doesn't, don't bother. Please don't waste time if you're not going to use it, or you don't want it, or you find it boring. Good luck. Bye bye. Thank you.